Nice to meet everybody here. I'm Delaney-Smith. I'm one of the principals on the Next Investors team at Credit Suisse. And I'm here with my colleague Talal as well, also from the team. We're in town from New York, and we're part of a group called the Next Investors Growth Equity Fund, which has been around at Credit Suisse actually since 2000, but we've restructured and turned ourselves into a new type of entity over the course of the past few years, and that's some of the background that I want to leave you guys with today to give everybody a sense of the kind of investing we do now and the mandate that we oversee at Next. So this might be a little bit challenging to see, but this just gives a few bullets on the background of the fund and the team and how we function. Next Investors has actually been around at Credit Suisse since 2000. And for a number of years, it was on the bank's balance sheet. It was one of the strategic investment groups within the bank, and it was over on the securities side of the business. So Alan Freudenstein and Greg Grimaldi, who are our two current portfolio managers, were overseeing that effort for a number of years and making investments for the bank into technology platforms that were strategic for them and strategic for the bank in some capacity. So it was a lot of market structure tools, trading technologies, exchanges, things that the trading desks would use. It was a lot of market data applications, risk and compliance tools, traditional enterprise software like big data analytics providers or visualization tools that the IT organizations at a place like Credit Suisse would use. And so from 2000 to 2013, there were roughly 70 investments that were made off of the bank's balance sheet under the name of Next. It was in 2013 that we actually restructured the fund, and that's when we spun it out of the bank essentially, brought it over to the asset management side of Credit Suisse and raised third-party capital to continue the same mandate, but now with outside institutional LP money as opposed to bank balance sheet capital. So we spun out our first fund entity back in 2013, and then just recently also raised our second fund, which is the first fund that we've had that since day one is no Credit Suisse balance sheet capital. So we got to the end of that fundraising process back at the end of Q2 this year. The Fund 2 entity that we're now overseeing is a little over 260 million in AUM. And we've been out actively making investments out of that vehicle for over a year now and continue to actively seek out new opportunities both in the US and globally to make investments out of that fund. And I'll get into a little bit more about what specifically we look for and the kinds of opportunities we seek in a moment. But before I get into that, I think one of the critical portions of our mandate is the relationship that we still maintain with Credit Suisse and its broader ecosystem. Even though we are no longer using Credit Suisse balance sheet capital and looking at things purely through a strategic lens, we are still very close with the institution, and our relationship with Credit Suisse supports a large portion of our mandate. And so we like to work with the various teams around Credit Suisse, whether it be IT, trading, capital markets, research, what have you, on the kinds of technologies that they're using, the kinds of technologies they're examining, or the kinds of technologies that they're recommending to their client base. And the reason for that is because we as a team, we are a fairly lean unit. There's only 5 investment professionals on the team. So part of our agreement with Credit Suisse is to lean on the resources they have to support our mandate, broadly speaking. So we lean on all those different areas within Credit Suisse for sourcing opportunities, of course, getting sent technology vendors that they're looking at or using. For example, for diligence opportunities, we work alongside the areas of IT and ops and trading as they're looking under the hood of products or starting to consider technologies as use cases at the bank. We'll work alongside them and diligence the company and leverage their product diligence to support us in our process. And then finally, we lean on the institution for adding value to our portfolio companies. We never want to be out making investments into businesses where our access and relationship to Credit Suisse and its client networks is not of interest to the portfolio company. We usually like to say that if being able to tap into that institution and all of its clients is not interesting from a growth perspective for the business, then they should probably go and get their money elsewhere. We really only like to invest in technology companies where that are selling into banks or selling into financial services and getting access to Credit Suisse and its touch points with other banks, with other financial services institutions, with the buy side. Those kinds of distribution channels are interesting to the business. Those are the kinds of opportunities that we want to be looking at as investors. This is just a slide that touches upon some of the different areas that we focus on. Obviously, like I mentioned before, technology platforms that are focused on the financial services industry are our core focus areas. So that covers everything from some of the traditional enterprise software types like big data analytics providers, security vendors, risk and compliance tools, all the way through to traditional market structure opportunities, exchanges, trading technologies, ATS platforms, things of that nature, and then also things like specialty finance and online lending platforms, and anything where there is a technology-enabled solution being applied within the financial services space that is established and developed enough to be selling into a large-scale enterprise environment like Credit Suisse. This just gives a little bit of an idea of some of the different areas of the bank that we work with. I think I've mentioned a couple of these before, and in a couple of minutes here, I'll toss it over to Talal to give some examples of some of the specific investments we've made and the teams that we worked with in order to curate those investments and support us in the diligence process prior to us putting any money in. But before we get into that, I do want to touch a little bit upon the stage and the types of opportunities we look at, because I think that there is a little bit of a sweet spot that we tend to focus on that is probably worthwhile to communicate today, which is we'd like to obviously lean on the Credit Suisse institution to run our diligence processes. And so the companies that we're looking into are really only technology platforms that are developed enough to be selling into a place like a Credit Suisse or its hedge fund client base or any large-scale institutional type customers within the financial services vertical. So it's typically not the very early stage seed, traditional VC type opportunities, two guys in a garage with an idea stage companies. It's businesses that are a little bit more developed than that. They've minimized their product risk, whereby they're now starting to sell into places like Credit Suisse. So we like to think that we kind of fall within the late stage VC growth equity bucket. More often than not, we find ourselves participating in rounds of that nature. We as investors tend to commit between 5 and 20 million into each opportunity. In a majority of cases, we do tend to lead rounds as well. And about 60 to 70% of our investments, we've either led the round and or taken on a board seat. So we do tend to focus on opportunities where we can be active from a corporate governance perspective. But then we'll also take observer rights or information rights in kind of a minority of cases. But given our access to Credit Suisse and its ecosystem, we do like to tap into that for value add on the back end. And we see that we are really only able to add that kind of value in the most constructive way if we're active investors in the rounds that we participate in. So we do tend to have a preference towards those kinds of opportunities. Again, 5 to 20 million is kind of our average ticket size, and we have been able to go larger than that in the past if we bring in our LPs as co-investors. As I think a lot of people in the room know, a lot of LPs out there these days are very interested in co-invest opportunities. Out of our first fund, we were able to offer 3 of those. And have been able to invest up to 90 to 100 million in some rounds when we bring our LPs in as co-investors alongside us. And we plan to offer similar types of opportunities out of our Fund 2 entity. While I'm on the topic of that, it's probably worthwhile to mention kind of the profile of our LP base, because like I said, we are no longer, Credit Suisse itself is no longer an LP in the fund. Our LPs are all third-party entities now. A majority of them are institutional in nature. It's a collection of different fund-to-funds, mutual fund entities, sovereign wealth entities, it's institutional family offices that have been sourced through the Credit Suisse private banking network and elsewhere. And in addition to that, there is a small stake that's held by senior management across Credit Suisse through a feeder fund entity. So it's the heads of groups like IT or trading or research are given the opportunity to invest on a personal basis, and about 10% of our fund is represented by that community, which obviously helps with our tie-in back into the bank. Going to the next page here. Probably worth touching upon our due diligence strategy. Again, we kind of lean on the bank to look at opportunities alongside teams as they're examining products or examining technologies to bring in as part of their operations. So as part of that, we're constantly staying within dialogue with the heads of different divisions, whether it be IT, innovation, trading, operations, to understand what kinds of technologies they're looking at, what kind of pain points they're solving for. And those kinds of discussions are usually what generate our investment ideas, because we recognize that if Credit Suisse is trying to solve for a certain pain point, or they're trying to reduce costs in a certain area or improve efficiencies in certain areas, then those kinds of issues are probably not just happening at Credit Suisse, but they're likely happening across the street. And so we'll triangulate investment opportunities based upon the discussions we have with the internal thought leaders at Credit Suisse, based upon the pain points that they're communicating to us and the areas they're mentioning that they're most focused on. And so I think now in the last couple of minutes, it's probably best to turn over to Talal to hit a couple of the recent investments that we've made out of the new fund.
Thanks, Jared. So I'm going to talk about a few of the investments we've made into the portfolio in the last couple of funds. In the new fund, we've made about 2 investments. By the end of this year, we expect to have made about 5 or 6. We just had our final close for Fund 2 in June of this year. So from inception to date, Next has made about 75 odd investments. Over the course of that period, they've returned a little over 3.5x cash on cash in terms of MOIC terms, around 40% unlevered IRR. A couple which I wanted to draw the attention to in terms of examples of how we've collaborated with various disparate groups within Credit Suisse, externally, and brought value add to the table for these platforms themselves. Our names in the market structure and buy-side support space. The first name I wanted to talk about is a company called FastMatch. FastMatch was actually an interesting situation where we had Credit Suisse technology called Crossfinder, and that was used to develop an FX ECN, which eventually became one of the largest ECNs in the world. This was started off in 2011, licensing technology from Credit Suisse, headed by a fellow by the name of Dmitry Galanov, who used to work on the FX desk at Credit Suisse at the time. Fast forward to 2017, the company grew to processing, from a processing standpoint, being the second largest FX venue globally, second only to Hotspot. And towards the end of 2017, it was purchased by Euronext, a very successful outcome for all parties involved. FastMatch as a platform continues to grow. Particular value add from our side, which was interesting in this case, was beyond the obvious use of technology, which a lot of it has been built at Credit Suisse over the past decades, was one of the avenues. But the other avenue was having a set of traders, folks who trade on the ECN from day one, was a huge boost to the company for a startup from a revenue perspective, which really helped and brought on a lot of different lot of interest from all sorts of venues, both buy side and sell side, to trade on the platform. Actually have some competition to Hotspot, which was instrumental in the platform being successful eventually. So that's an example of a place where we've interacted in the market structure space. Another one I wanted to talk about is Vitios, where we interacted with the platform both through the prime services channels, as well as interconnectivity between other portfolio companies themselves. Vitios essentially is a back office, middle office shadow accounting firm, basically helping provide end-of-day data for all sorts of hedge funds and asset managers across the world. This was started at a time when outsourcing was all the rage. So this company had operations both in Mauritius and India. Being at Credit Suisse, we do have a global reach. We have both large offices in India. And in addition to that, the entrepreneurial team over here was based out of the U.S. So we had a good amount of connectivity both in the U.S., in Asia, and then 24/7 support for any manner of funds which chose to purchase the platform. That too was recently sold about a year and a half ago to a financial buyer. Company continues to operate within a shell. Again, very successful outcome, and right down the fairway in terms of things we look at. The last platform I'm going to talk about is one called Sapiens. That's actually one of the newest investments within the fund. It's the first investment out of Fund 2, and it's a rare situation in which that we not only led the round, but are majority investors in the platform as well. Sapiens focuses on areas of business productivity for organizations with a very large number of employees. So think of organizations with, let's say, large call centers or payment processors, which have thousands, if not hundreds of thousands of employees they need to monitor and see what folks are working on, which folks are the most productive, and that's a great way to align incentives for employees. Sapiens essentially takes away a lot of screen time for historically what used to be on the plate of a line manager and keeping an eye, keeping track of what their employees are working on, and basically providing end of day or end of week or end of month reports in terms of exactly who's working on what your most successful employees are focused on, and helps to develop a system of best practices if that makes sense for a particular organization, group or department. The investment is pretty recent. It's first investment out of the fund, about a year old. We're very excited about the direction the company's headed in. The company's made a number of significant sales since we came on board. This is one of those examples where we've been very involved from a hands-on perspective as well. One of the first orders of business was moving the company from India to becoming a Delaware-established organization, which is obviously very beneficial from a tax perspective. Also installed a new CEO who has a background in sales, into especially selling this sort of software platform. And as Jared mentioned, we have a 3 to 5 year expected in exit time frame for most of our opportunities. So this seems to be right along that track as well. So that's an example of 3 different companies in 3 different areas which we've invested in. Happy to take any questions directed with both myself or Jared for the balance of the presentation.
I actually had a question. What's the sort of view on AI in your radar at the level you're looking at? Is AI a market-ready topic? Are there interesting opportunities out there in the space that you're looking at, guys? Can you say?
A lot of, almost every sort of platform we've looked at, especially in the last 2 years or so, even if it's historically been human capital-centric sort of business, all of those businesses are bringing in machine learning and AI tools to help with better, faster, and cheaper ways of implementation. In fact, soon after we sold Vitios, we found a new provider in the space, which we're actually in active term sheets discussion on, to basically solve a similar problem, but kind of the next generation of problems. And in the tech space, as you can tell, John, things move very quickly. So Vitios was an investment we made almost 10 years ago. And it takes about 7 to 10 years for for same problems having different sort of solutions to be solved. So that kind of dictates what our time frame for exit is as well. We're actively working with a company which solves again the same sort of problem, but with an AI machine learning sort of perspective.
I'd also say one of the themes that we're seeing within the AI space in particular is a lot of people are claiming that they have those capabilities. It's obviously quite a buzzword at the moment. But there have been instances where we looked under the hood of a few companies that are claiming that they're trafficking within that space, providing AI for whatever kinds of applications, and it's not really AI at the end of the day. It might be some kind of lightweight automation or workflow processing capabilities. So we have seen a little bit of kind of a misnomer in some cases in terms of how people are actually defining it. And another trend that I would mention in that space is some of the vendors we've seen that have gained the most traction with actually employing some kind of an AI capability or workflow automation capability are the ones that are accepting there is still a need for human intervention to some extent. They aren't necessarily functioning as a complete black box, taking care of everything on the back end, and you don't actually know what's happening, whether it be back middle office operations use cases or trading investment analysis operations. There's all kinds of different usages that we've seen, but the ones that seem to be gaining the most traction at the moment are the ones that are applying AI strategically such that there's still a role for the human to either oversee the automation of some kind of a workflow or help assist in validating the outcome. Gotcha. There's definitely a few vendors we've seen that have solved for that in the right way that we're seeing kind of gain the most traction at the moment, at least amongst the banks.
Great. Thank you, guys. Any other questions from the audience? Yes. Can I grab that microphone, Jared? Jared?
Oh, yeah.
Thanks. Just a sec.
Very simple. Do you invest in data analytics companies, alternative data companies, data providers?
We do. Yeah, if you look at our historical portfolio, which I think is actually in the last, this page here, you could see some of the older investments we made out of Fund 1 fell within that space. We've got a number of investments that fall within the big data analytics space, including Palantir and digital reasoning. We also invested in a business called ETF.com, which functioned more in the ETF-related data and content space, which we ultimately sold a portion of it to Bats and a portion of it to an events and management company. And so there's been a number of different opportunities we've seen within just the actual data and data analytics space. Now we're actually definitely starting to see more traction within the alternative data world with the proliferation of data sources out there and the number of people, specifically hedge funds and investor types that are focused on incorporating alternative data sources into their investment models. We've seen a number of different providers of the actual data itself, and we're also starting to now look into a lot of new opportunities of businesses that are enabling the usage of that alternative data. So I think everybody's kind of accepted the fact that there's going to be more raw data feeds as these alternative data sources have proliferated over time. We're starting to see a trend in tools that are coming up to the surface of enabling the usage of it, acting as marketplaces, acting as golden sources or validators of the good and high quality information that's out there. So it's definitely a trend that we're seeing a lot more of. And if you look at our pipeline right now, there's probably a small handful of companies that fall within that bucket that we're looking at.
Great. Thank you for the question. Last chance? Okay. You guys will be around for a while and happy to speak, I'm sure, right?
Yep.
Great. Well, thank you, Jared. Thank you, Talal. That was very insightful.